I invested in a startup. 2 startups actually. Basically a venture capitalist firm at this point. What's happening, folks? My name is Robbie, I'm a specialist finance broker, and today we are talking about startup investing. More specifically, my startup investing. So if you've followed me on social media, Instagram, YouTube, TikTok, you would know that I invest in the stock market, I invest in cryptocurrency, I invest in a whole host of assets, and I like to try and keep myself relatively diversified. To be honest, I'm very happy with the diversification that my portfolio has at this stage in my life, but last year I added a new sort of asset to my portfolio. Startups. So what is a startup? By definition, a startup is a company in its initial stages of business. Founders normally finance their startups and may attempt to attract outside investment before they get off the ground. Funding sources include family and friends, venture capitalists, crowdfunding and loans. So let's use Uber as an example of a startup and how it was funded. Uber's a huge company, just about everyone has heard of or used Uber at this point. But at the beginning, they were a startup. In 2009, Uber was started by Travis Kalanick and Garrett Camp. When they started the company, they invested $200,000, and this is what is known as the seed investment. That's the first money put into the company to get it started. This was followed by an angel round in 2010, and that's because the company needed more money to grow. In this round, they received $1.25 million from people like Gary Vaynerchuk, Naval Ravikant, and 27 other people and investment companies. Further on from that, they needed more investment, they needed more money to grow the business, so they moved on to a Series A round, and this time they received $11 million from venture capitalist firms. But these people aren't just giving Travis and Garrett money for nothing. They're investing in the company for equity. Every time there's an investment round, there's a share price. So the amount that you pay will determine how many shares you receive. For example, if you put in $100,000 and the company is currently priced at $1,000, you get 100 shares. Ideally, those shares then go up to $2,000 a share, and you can sell them for $200,000, for example. Overall, since inception, that means the start of the company, not the film, Uber has received $25.2 billion, with a B, in funding, and that's been over 32 investment rounds. And as of today, the company is worth just shy of $91 billion. They received $25 billion in investment, and the company is now worth $91 billion total. So it's likely that all these venture capitalists who invested early on have probably made a good amount of money from that. And the earlier that you invest, typically the lower the price. So the people who invested super early will have made an absolute killing. So that's a very, very basic example of how investment rounds work. As we all know, I didn't make this channel for dry, super in detail finance knowledge.
Decimal points, high frequencies, bang, 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 fucking digits, all very acidic, above the shoulders mustard shit. Right?
This is aimed at normal people like myself and probably you who's watching this, not venture capitalists. They already know how it works. So that's as much detail as we're going into today. Now, if you had watched my portfolio updates for the last year, you would know I have 2 secret companies on the list. And if you hadn't watched my portfolio updates for the past year or so, why the f*** not? These 2 companies were 2 startups that I thought could probably do with their own video rather than just being announced on the portfolio update. So why did I decide to invest in a startup company? Growth. The opportunity for growth. I could sit here and invest in index funds and huge companies like Apple and American Express every week for the rest of my life. And over the long term, I'd probably do alright. But I wanted to take the next step in my investment career and be a part of something different rather than just investing in publicly listed companies. Ideally, the 2 companies that I have invested in one day go public and I make a nice profit. But there is also a much, much higher risk of these companies going out of business in comparison to companies like American Express or Apple. Now, we've all heard of risk and reward. Typically, the higher the risk, the higher the reward that comes with it. So I'm taking a risk on these companies and hopefully I reap some good rewards later down the line. So let's get into the companies and how much I invested in each company. Hello everyone, I'm just interrupting this video for a quick plug. If you're watching this video, you probably already know who I am, but for the benefit of those who don't, I'm Robbie and I'm a specialist finance broker. This means I help property investors, property developers and small to medium business owners with funding on their projects. That's buy-to-let mortgages, bridging loans, buy-to-let mortgages for portfolios, development finance and commercial mortgages. If you're a property developer, investor or business owner, email me on this email address or send me a direct message on Instagram to find out how I can help you. Right, plugs over, back to the video. The first company I invested in was Chip. Actually, I think they sent me some stickers. They did. So here are some stickers that Chip sent me as part of like the investment pack. Here's a few. This one says invest differently, build real wealth, download Chip. This one is investing differently, building wealth. I own a part of Chip. Quite good stickers actually, but 29-year-old man, I don't know what to put stickers on. I don't have a skateboard anymore, so actually Chip did not only just send me stickers, hold on, they also sent me a full tracksuit. There's a little Chip logo there, the matching trousers for the tracksuit. I actually don't even know if any of that fits me. I don't think I've wore it. Hold on. That's actually not bad, to be honest. Fits pretty well, it's quite nice. Anyway, I'll keep this jumper on while we talk about Chip. So if you hadn't already gathered, Chip is a finance app, and they plan to be a self-proclaimed super app for finance and investing. The way Chip works is they negotiate deals with large banks and financial institutions to bring savings accounts to the Chip app. Ideally, they're negotiating really good interest rates for their customers. And this allows Chip users to get a much better rate on their savings than in a regular high street current account or savings account. They also have investment funds on their app powered by BlackRock, Vanguard and iShares. Now, just for complete clarity and transparency, this isn't financial advice. I'm not telling you to go and open an account with Chip or anything of the sort, but it's definitely a platform worth looking at, and again, full disclosure, I am an investor in the company. Small investor, but an investor. So don't take this as me telling you to go and make an account, but it could be worth looking at. So how much did I invest in this company? This is going to blow your mind. I invested £3,000 in March 2022, and at the time the company had a valuation of around £127 million. Because the company isn't publicly traded, it's difficult to get an up-to-date value on those shares, and in all honesty, given the market's volatility for the past year, 18 months, I'm relatively confident I'm down on that £3,000 at the minute. But as is the case with pretty much all of my investments, it's for the long term. I don't plan on cashing it in anytime soon, so I don't really care about the current value, if I'm being completely honest. And this is also an example of my investing theory or strategy. £3,000 doesn't seem like a lot of money for an investment for some people. For some other people it could be a lot, but on this channel we've talked about investing tens of thousands into the S&P 500 or investing tens of thousands into property. But as I mentioned before, this is a relatively risky investment. So £3,000 is what I was comfortable with investing in this company. If I wake up tomorrow and I receive an email that Chip has gone bankrupt, I won't be happy, but it won't make me bankrupt as well. Now, next up is company number 2. This one's another technology company, but they make physical products as opposed to software. You might have even heard of this one. This is Nothing, a tech company that makes smartphones and associated accessories. This one requires much less explanation. They make phones, like this one, and this one. They also make wireless earphones as an accessory to the phones, and they are on a mission to be a completely carbon neutral company. Some notable investors in Nothing are Google Ventures, Steve Huffman, CEO and co-founder of Reddit, Kevin Lin, co-founder of Twitch, Casey Neistat, one of the most popular creators on YouTube, and Robbie Corbett, specialist finance broker. So with Nothing, I invested £2,920, and this was at a valuation of €500 million. And again, because Nothing is not a publicly traded company, it's hard to put a value on those shares. However, Nothing has had an additional investment round since I invested. They received further investment from Google Ventures, Swedish House Mafia, and a host of other investors as well. And even though the valuation was not made public, there are estimates putting the value of the company at around $1 billion. So it's good to know I'm in good company with Nothing, and the business seems to be moving in the right direction. But again, long-term play, so it doesn't really matter what the current value of the company is. As long as the value isn't zero, it's fine. So, startup investing. All in all, I've invested £6,000 over the two companies, and hopefully they'll either go public or they'll be acquired by a larger company. But as is the case with everything, this is just another building block to add to the portfolio. And now I've finally made this video, I can add them to the portfolio update next time and stop referring to them as Secret Company A and Secret Company B. Finally, there is no longer a secret after 18 months or so. Sorry, I've sort of dragged my feet on this video. Anyway, thank you as always for watching, folks. Let me know in the comments if you've heard of the companies, if you have used these companies, if you've invested as well. And also, for some reason, in the middle of the video, I didn't mention that I invested in these companies through a company called Crowdcube, who do crowdfunding investment rounds for small, medium, large companies. I would just go back and edit myself into the middle, but that would require getting changed again, and I don't want to. Thank you as always for watching, folks. Take it easy.